Hello, everyone, and welcome to this module on Introduction to Investments. My name is Lindsay Rihanna Robles from ABM 12A, and I'm excited to guide you through this important topic. Before we begin, here's an overview of what we will cover. First, understanding investment, an introduction to investing. Second, investment basics, types of investments, key investment terms for financial management, investment risks and considerations, and lastly, our key takeaways. Let's get started. In today's world, understanding how to grow your money is more important than ever. So, what exactly is an investment? Simply put, investments are financial assets or instruments that you acquire with the goal of generating income or increasing in value over time. Think of it as planting a seed. You put in a little effort and time with the expectation of growth and returns. Now, let's move on to the second point, caution in pursuing opportunities. It is essential to approach investment opportunities cautiously. Dapat maging maingat sa paglapit sa mga oportunidad sa investment. Ensure that investment opportunities are pursued only when extra resources are available to mitigate risk. And finally, the third point, importance in personal finance. Investments play a vital role in a personal finance. They are a powerful tool for building wealth, securing your financial future, and planning for important life goals like retirement or buying a home. Think about your parents saving for your college education. They might invest in mutual funds or stocks to grow their money faster than just keeping it in a savings account. However, it is crucial to approach investments with caution. Don't rush into opportunities without careful consideration and only invest you can afford to risk or invest only what you can afford to lose. Sa investment po ay 50-50 ang pera natin. It is not always a win and it is not always a loss. This means avoiding putting funds at risk that are needed for your daily expenses or financial security. This module will provide you the foundational knowledge you need to start your investment journey wisely. Now, let's dive into some investment basics. Many people view investment as a way to earn supplemental income, and that's a very valid perspective. Investments can provide an additional stream of income, which can enhance your financial stability and provide a greater sense of financial security. However, for most people, especially those in profession outside of finance, relying solely on investments for your primary income is not a good idea. The financial market can be unpredictable, and relying too heavily on investment income can expose you to significant financial risk. Imagine someone who quits their job to trade full time without sufficient knowledge or capital. If the market takes a downturn, they could lose their entire income source very quickly. Therefore, it is essential to establish a stable primary income source, such as a regular salary or income from your business. This provides a safety net, a reliable foundation upon which you can build your investment strategy. Cash flow independence. This refers to the ability to generate income from investments that is separate from your primary job or business. These cash flows can act as a backup during emergencies or as a way to fund specific goals. Relying solely on one source of income, like a job, might limit your financial options. Investments create a new stream that you can tap into, giving you more control over your finances. Unstable revenue. Investment income, while rewarding, is often unpredictable. The stock market, real estate, cryptocurrencies, and other assets experience fluctuations influenced by economic conditions, demand, and other factors. Why is it matters? Depending fully on unstable revenue is risky. If the market performs poorly, your expected returns could decrease significantly, and in some cases, you could even lose money. Kapag bumagsak ang market, posible kang malugi o mawalan ng kita. kaya hindi advisable na iasa lahat sa investments. Lastly, is need for stable primary income. A primary income like your salary or regular business profits provides a steady financial foundation. It ensures that your daily expenses, bills, and necessities are taken care of reliably. Investments, on the other hand, are better suited for long term goals like retirement or building wealth over time. Why is it matters? Without a stable income, maaaring ma-stress ka sa market downturns at mahirapan sa mga emergency needs mo. Here are some examples. Anna, who owns a clothing shop, creates another income source by renting out a small property she invested in. Even if her shop sales are affected by seasonal changes, her rental income ensures she has money coming in consistently. This allows her to focus on improving her business without financial stress. For unstable revenue, Ben, who invested heavily in cryptocurrencies, made great profits initially. But when the market crashed, his portfolio's value dropped, leaving him unable to afford his basic expenses. Para po maiwasan ang ganitong risk, kailangan natin ng stable at reliable na income source. Carla, a teacher, keeps her job as her main source of income. She uses a portion of her salary to invest in mutual funds, which grow gradually over time. If the market dips, Carla doesn't feel the financial pinch because her salary covers her essential expenses. In other words, ang investment ay tools lamang para madagdagan ang kita mo. Pero, mas effective ito kung may stable na primary source income ka. Now, let's explore the different types of investments available. One fundamental category includes fixed income and equities. Fixed income usually refers to investment like bonds, which provide a steady income stream. Next, equities. Equities, on the other hand, are stocks, which represent ownership in a company. Both can provide income or dividends to investors. Ano nga ba ang bond? A bond is a type of loan where you, the investor, lend money to an organization like a government or company in exchange for regular interest payments and the return of the loan amount at the bond's maturity date. It's a way for organizations to raise funds. Beyond this, there are alternative investments like real estate and commodities. These can offer diversification benefits, meaning they can help reduce your overall risk by spreading your investments across different asset classes. Finally, there are other investment assets such as collectibles and cryptocurrencies. These tend to be more speculative, meaning they can offer the potential for higher returns but also carry a greater risk of loss. It is important to thoroughly research and understand any investment before putting your money into it. To navigate the world of investments effectively, it is crucial to understand some key terms. First, there is a management fee. This is a fee charged usually as a percentage of your total investment to compensate financial professionals for managing investment funds, such as mutual funds. Understanding this fee is essential for evaluating your overall investment returns. If you invest in a mutual fund managed by a bank, they will charge a management fee. This fee covers the cost of the fund managers who make investment decisions on your behalf. Next is dividends. Dividends are a portion of a company's earnings that are distributed to its shareholders. They can be a significant source of income for investors and a sign of a company's financial health. For instance, companies like Nestle Philippines often pay dividends to their shareholders as a way of sharing their profits. And lastly, voting rights. Voting rights are another important aspect of investing, particularly in stocks. These rights give shareholders the ability to influence major companies' decisions. For instance, if you own share in a corporation, you may have the right to vote on important matters such as the election of the board of directors. Now, it is also important to be aware of the risk involved in investing. First is liquidity. Liquidity refers to how easily an asset can be converted into cash. Investment with higher liquidity offer more flexibility. Second, margin trading. Margin trading involves borrowing funds to invest, which can amplify both gains and losses, making it a higher risk strategy. So, let me explain this further. Ang margin trading ay ang paggamit ng borrowed funds mula sa broker para mas malaki ang puhunan mo sa isang investment. One of the advantage is you can earn higher if tumaas ang value ng investment. While the disadvantage of this is kapag bumagsak ang value, mas malaki rin ang magiging loss mo kaysa sa original na ininvest mo. Next is correlation. What is correlation? Correlation shows how two things are connected, like how the prices of two investments affect each other. Why does it matter? When you understand correlation, you can mix different types of investments. This helps lower the risk of losing all your money if one thing goes wrong. Lastly, inflation. Inflation, which is the rate of at which prices rise, can erode the purchasing power of your investment returns. Therefore, it is important to consider investments that can outpace inflation. Why does it matter? If your investments don't grow faster than inflation, you're actually losing money. I have an example here for these two risks. For liquidity, Mia, who holds shares in Apple Corporation, dahil highly liquid ang stocks kapag kailangan niya ng pera, madali niya na ibebenta ang shares niya at nakakakuha agad ng funds. Meanwhile, Jake, who owns a piece of land, ay nagkakaproblema sa pagbebenta nito dahil walang madaling buyer, and he is forced to sell the land at a lower price than it's worth. In correlation, think about oil prices and airline stocks. When oil prices go up, airline stocks often go down because fuel costs increase. When oil prices go down, airline stocks tend to go up because flights become cheaper to operate. Understand this can help you balance your investments. In conclusion, a solid understanding of investment fundamentals is essential for effective wealth management and mitigating risk. You must be able to identify and manage risk to protect your capital and achieve sustainable financial growth. Continuous learning and staying informed about market trends are crucial for making timely and informed investment decisions. The world of investment is a dynamic, so a commitment to ongoing education is a key to your success. And remember, strategic investments in opportunities can potentially accelerate your financial growth. Thank you for joining this introductory module. I hope this overview has provided you with a solid foundation for understanding the basics of investing. I encourage you to continue exploring the world of investments and take control of your financial future. Again, this is Lindsay Rihanna Robles from EVM 12E, wishing you the best in your financial journey. Thank you for listening.